my colleague Ruchi broke the story that Aramco may be interested in picking stake in BPCL if offered or if put on block. Now, there is a lot of if, when, how, will. So before we get into anything, remember these four words: if, when, how, and will. So if you're buying BPCL, please repeat these four words and then make a judgment on the stock. Ajay Srivastava joins us now. He joins us live from Gurgaon. So let's talk about the Delhi weather, which I've been told is winter has kicked in. But Ajay, while winter has kicked in Delhi and Gurgaon, is the winter getting over for Indian stock markets?
I think it's over. I think it's already over, and I think it's over for a very small select of stocks. Rest are going to face a very frozen. They'll be turned out of the door and kept out of the party for a long time to come. And I think this is very becoming, nothing is changed in 2 to 3 years. Everything remains the same. The few people will come inside the room, feel the warmth, feel the party. The rest have to stay out. I think, I'm sorry to say this, but it's going to get accentuated that the smaller caps, I think, is going to have a long time before they come into favor. So winter is over for the time being, as far as we are concerned, for the larger stocks, MNC stocks, some of the PSU stocks. But I think 70% of the Indian stock market will remain out in the tundra cold for this winter at least. And it's unhealthy air outside, so you can imagine what happens to the mid caps who remain out in unhealthy air.
About the Delhi haze as well, Ajay. But tell me, what gives you that confidence that the winter is over, Ajay? I mean, what signs are you reading from either earnings or, the festive cheer around? What makes you believe that the worst is now behind us?
Nothing to do with the current economic. What we are seeing is, the institutional framework of our stock market has changed over the last 2-3 years and now is dramatically different than what it was before. And one of the things is that the holding with individuals for at least the good quality stocks is now at a historical low at this point of time. And even individuals who hold them, they are not selling those shares. So you're actually seeing that if you look at the top 10, 15, let's look at the MNC stock for instance, you'll find a dwindling supply of stock coming to the market. And with the new FNO rules, that fact that we're talking of physical delivery versus the older model of settlement on the trade, you will find that it will be more and more difficult to short these stocks as time goes by. For instance, nobody wants to sell a liver, nobody wants to sell a Nestle, nobody wants to sell the AstraZeneca Pharma. Whatever you have, you're buying and you're holding. So gradually what you're seeing is that you got, for instance, the private holding is about 10 to 11%. Out of that, maybe 2 to 3% actually comes for trading in the market. So look at another year or 2 years, and if this economic situation of low growth continues, more and more people who have not bought it will keep buying these stocks, which is what this defies the gravity of 60 Ps and 70 Ps, because now it doesn't matter what the P is. You want those stocks and you want to hold it irrespective of what the result comes in the quarter. So even if you have a bad result, so for instance, Nestle comes a bad result, I doubt any of the diehards are going to sell those stocks. Maybe a few thousand shares for a day or two, but rest will come and buy the stocks. So what we are seeing very clearly is one, lack of supply in the market of good quality stocks. People who are holding it firm, and institutional holding is now at 80-85% plus of most stocks of top 20 names, which leaves very little credence to market trading in terms of delivery. And insurance companies will keep adding up. They can't, the corpus is going up. So where will the delivery come from these shares?
And, talking about the most preferred lot, Ajay, it clearly seems like there is a rush towards the government paper for once. We've seen all the news flow on BPCL, not just with regards to divestment, but the ET Now exclusive that maybe Saudi Aramco may be looking at buying some part of the government stake in BPCL is very much at the nascent stage, the talks that is. And look what happened to IRCTC. I mean, not just the kind of response that the paper got, but the kind of stellar debut it's had ever since. What is it that you're making of some of these prized government possessions, and whether they make for a wise, prudent investment call or not?
Of course, if you remember the last budget, we spoke about PSU stocks. We believe that it is not any more choice. See, earlier it was a choice to sell or not to sell. Given our current scenario, there is no choice. The government has to sell, and it's doing whatever it takes to find a way to sell them. You look at what has happened to Air India. They're going to warehouse 45,000 crores of debt, and I don't know, pay it from whatever resources they got to pay it, but find out a clean airline to hand over. So I think the market and investors have to realize that it's now no more. I think Nukul was saying that if and when, etc. I think if is over. When is the key question? When will they do it? They will have to do it. It's a matter of time. And you know, the last gambit of tax cut, that's played out in a very different way. You saw what did Hindustan Liver do? It increased the dividend. So that money is not going to come back in the system for capex or any further growth of economy. So the only way now to plug this gap and to build some corpus for development infrastructure is sale of PSUs. And these are dirt cheap. The best part is that these are dirt cheap stocks. If you look at resource companies like Nalco, NMDC, they are dirt cheap. If you look at even oil companies, for instance, given the infrastructure, they're not so expensive. Maybe BPCL has run up a little bit further, but I still believe that it's in the zone where the buyer will pay much higher than what the price is today. So I think by and large, it is so cheap that you really can't go wrong if these companies are sold. And number two is, I think they've exhausted their ability to pay dividends. So government's old model of taking dividend is not going to be valid anymore. Most of them are down to bare minimum in terms of cash reserves and profitability. So the only option is to sell. And if you sell them, there are very valuable stocks. So I think it's a very safe bet. It may take a little longer, but you are comfortably placed in all the PSU shares, at least the profit-making ones.
Okay. Ajay, what are you making of earnings so far? IT names in particular, we've got 3 of them out now. Wipro surprising, Infi looking better than what perhaps we saw from TCS. Consumption, the other theme where HUL has set the tone, and it's pretty decent.
Well, I think it's very interesting because I think they have disappointed. And I think the biggest disappointment has been TCS because that was the case where a CFO took over as the CEO. So not to use disparaging terms, and Sikka came into Infosys, which is a veteran of IT. So it is a pretty decent battle between, please don't take it differently, a bean counter versus industry veteran. And looks to be the industry veteran is winning the game at this point of time. So I think among all the people, Infosys has done okay well. Stock may not have done well after the announcement, but it's doing decently well. TCS has been a disappointment. May further disappoint, I'm not too sure, but I believe that next year the result will be remarkably better, because if you look at the forward premium they must have taken, they would realize something between 73 to 75 rupees to $1 next year on their sales, and which augurs well. Even if their volumes remain constant, the currency benefit is going to be pretty steep in the next 12 months period. So no reason to sell. I think just keep it. TCS, good to keep in cash, because I think huge dividend is coming your way. That's the only way they can compensate. They've done it now. I think they'll do it again. So I think by and large, good dividend, good placement, low risk, less worries. Keep going. It's not bad for next year.
The other interesting thing which is happening is the promoter pledge share reduction which is taking place. We saw that yesterday with the Bajaj consumer, wherein 29% stake has been offloaded by Kushagra Bajaj himself in the last 7 months. We've seen that with Imami, about 19.5% offloaded in about 2 tranches. Z, for instance, 11% to Oppenheimer, Sterlite Technologies, or for that matter, Apollo Hospitals as well. Would you say wise decision? Because it seems like this is some sort of a last resort. And is there any investment opportunity amongst any of these high debt companies?
See, okay, we have a holding in Apollo Hospital. To that extent, we have a large holding there. But I think it's not a good sign, because see, the whole idea of an entrepreneurial game is to take risk, to risk capital and increase the wealth of the country and the economy to grow. When promoters start to shrink themselves, they sell the asset, let's not borrow debt, that's not a good sign as the economy is concerned. It may be good decently for the companies per se that the stock is doing well. But broadly, as an indicator of what they see as the future in the country, that's not a good sign, because everyone wants to deleverage. That means they don't want to take more economic risk in this country, which is not a good sign. So my personal view is, yeah, it's positive for the stock for the short term, but not necessarily good for economy, because if all these entrepreneurs shun risk, then who's going to take the new projects forward? Who's going to, Where's the new capital going to come from? Will it be only institutional capital from abroad, which will dictate India in the future? That's one way to look at it. But will it mean that the entire Indian diaspora of entrepreneurs are going to vacate new project space? That's not a good sign for an economy by and large. So I don't get a great feeling when everybody is kind of deleveraging and saying, including Reliance said, I want to deleverage completely. That's not good, because idea is take some risk, get some new projects going, get growth going. That's what makes sense as an entrepreneur. Just retiring back to embassy kind of a stock, embassy right kind of stock for dividend growth is not a happy sign.
Auto, just to touch upon that, Ajay, I think you're of the camp that feels it's really the festive fillip that's factored in currently. What would your view? Would your view remain a little cautious on auto?
We are cautious because we just gone short again. I think the optimism on auto is perhaps a little misplaced even at today's levels. And let us see how the quarter results come out, because the discount would start to play out, and it's not that the festive season is going any gangbusters. So I think there is a fundamental way we need to relook at auto because of two reasons. One is demand has compressed, and look at the competition. Look at 3 years back, Hero was the sole guy in 100cc, 125cc market. Look at what's happening today. Look at Eicher in the larger categories. Now there's Java, Enfield, Indian, you name the brands just sitting there. Look at the car companies, what's the competition. So I think we need to fundamentally re-rate automobile sector from good, cushy, monopolistic kind of a situation of the last 3 years to what we foresee for the next 3 years is going to be very competitive, low return industry in the near future. So our view is that every time the stock market goes up, we need to go and happily take a shorter position on the market than go long, because industry dynamics are becoming akin to something like telecom is. It's going to be dog eat dog world for market share, and that doesn't sound good news. Yeah, Maruti has 36,000 crores of cash they need to use someplace, but I think they're losing the market standing as well at this point of time. So I'm not so gung-ho on auto that even if sales takes place is for most companies. They're pretty expensive even at current prices.
Right. Okay, Ajay, great to have you on the show with us. Thank you so much for taking the time out and speaking to us right here.